It's hard to say that we're in the early innings here, obviously coming off the bottom of 2008. I think, what I will also say is there's been nothing that you can look at historically that's been anything like this. The low growth and no growth, the zero interest rate environment. I actually think we could go for a while longer simply because we're actually in a position where the market is just adjusting to what we consider to be normal. Look at where the rates are today on the short term. This is sort of we're finally getting back after 10 years to something that people can actually analyze in a more normal way. And so, this could go for a while.
But so when you talk to your clients on the investing end, or when you talk to your corporate clients on whether it's M&A or the other advisory end, you're telling them full steam ahead?
Well, what we're saying is you have to be strategic on these. So, so if you're looking at always trying to manage with some sort of a disruption, it's really hard to do. I think there's always tail risk. So I think one of the lasting impacts of the financial crisis is that it's always in the back of your mind. And so even when you're sort of moving forward with great speed, you're always in the back of your mind going, okay, what am I missing? And I find that with a lot of corporate CEOs I talk to, they're always like, okay, what am I missing about this? And what do we think the long-range implications are? And what's the likelihood we have something like that happen again? And I think much the same way that we had generations who grew up post-depression and we had this amazing economic expansion that lasted for a while without disruption. I think this is a sort of our equivalent for our generation. And so why do I think this could go longer? I think it could go longer because we're still in a really low-rate environment and there's still not a lot of unbridled growth economically, and companies need to do things to cut costs and drive margins. And so I think the M&A thing could last for a while.
Where do you stand on buybacks right now? In terms of when you're on the advisory side of your business.
So
I guess the question is.
So I get this question all the time.
The amount of buybacks we've had over this past year, what does next year look like, and therefore what kind of implications does that have on the market? Because I could argue that one of the reasons we've seen the bull run we have is in large part a function of the fact that companies have bought back so much stock. Well,
that is true. So you see there's just fewer places for people to put money to work, right? And that's a reflection of the fact that we've been in a low economic growth environment. So I think I always tell CEOs and CFOs when they ask about buybacks, you should really be thinking about total shareholder return. If your business is generating positive cash flow and you want to return cash flow to shareholders and you don't have something to do with it, you should return cash flow to shareholders by buybacks or increasing your dividends. And I think that will continue. What I always worry about is when people are manufacturing stock prices by levering up on their balance sheets and buying stock back. I don't really see that happening a lot. So I kind of feel like we could continue to go along the same line for a while.
And when it comes, you focus mostly on the middle market.
Yeah.
In terms of transactions, in terms of the kinds of deals that you see.
Right.
Do you feel like in terms of the regulatory environment right now, that any deal is on the table, or that actually big is bad and actually makes it a little bit more complicated for you? Well,
I think if you're flying under the radar screen, that's probably a better place to be. High-profile, politically motivated deals are difficult. I think if you're some of the cross-border transactions are a little bit more challenging. I think anything that has anything to do with China is challenging. But we're still seeing a ton of flow cross-border with Europe. And I think everyone was super worried about what's going to happen with Brexit in the EU. But the reality is, people wrap their heads around it. It's a risk factor, and then they move on doing what they need to do.